Orogen Royalties. A lot of people always ask me about sort of the name and how it came and what organic royalty generation means. And for us, organic royalty generation is founded on the principles of our prospect generation business. And that is taking high quality data, a lot of geological expertise, working in very prospective terrains, and coming up with high quality exploration projects that we put into the hands of our exploration partners. And through the transactions that we do with those partners, we obtain share payments, cash payments, but we always create a royalty at the end of every transaction that we do. And it's that royalty, which for us is actually the most important part of that transaction. And it's created our small but growing royalty portfolio today. It's also created our two key assets within the company, and I'm sure we'll talk about this as we go through it, both being the Ermitano royalty and the Silicon royalty. One is in Mexico, one is in Nevada, and now one called Ermitano is actually a cash flowing royalty. It provides us with a tremendous amount of stability, with the Silicon royalty in Nevada providing us a tremendous amount of upside. And as a result of the cash payments and share payments that we receive and the royalty revenue, it's made Orogen profitable. Our prospect generation business is profitable, and the rest of the business in itself is profitable. And so we have a very strong balance sheet. The company currently has about 20 million, 19 to 20 million in the bank. And that keeps us going. Our operations are based throughout Western North America, Mexico, Nevada, which is sort of the nucleus of where we do our operations, and then also in British Columbia. So porphyry copper exploration, gold exploration is our expertise, and we have a number of joint ventures that are active today as well. We also do selective royalty acquisition, and that is a less frequent type of transaction. I think for Orogen, you won't see us involved in a lot of the processes that other royalty companies get engaged in. Our cost of capital has traditionally been very high. And so instead, we focused on earlier stage exploration opportunities using our business development expertise, using our geological expertise to find opportunities that others may not be looking at. And so we've done a few of those over the past couple of years, but it's very selective. The focus for us when we do any transaction like that is to focus on strong risk-adjusted returns. And that's where we like to spend our time. And so I think that's probably a good segue into sort of the model as to how we work. So some financial highlights. We've had a pretty strong revenue stream over the past couple of years. Since Ermitano went into production in 2021, we've been profitable. The revenue that we're seeing this year coming into the company is expected to be $4.5 to $5 million Canadian dollars. We have revenue over the past quarter of about 2 million, and so year over year, that's up 13%. And so the treasury continues to grow to this day. Our flagship royalties, as I mentioned earlier in the previous slide, include the expanded Silicon project. That is in Nevada. We hold a 1% net smelter return royalty. The operator there is Anglo Ashanti. Total resources today are a combined 13.3 million ounces. So a very impressive number. It is a tier one asset. And we'll talk about that as we go through. Ermitano is our smaller royalty, but it is providing a tremendous amount of stability within the company today. A cash flow, as I've indicated in the previous panel there, provides us with profitability. 2% net smelter return royalty. We have a new discovery in the project that was announced last week. We'll cover that off in our presentation too. And then sort of to the bread and butter of our business, the royalty generation side. We have 8 active option agreements today. We partner with private companies, small juniors, and all the way up to some senior gold and copper producers as well. Over the past couple of years, we've been very successful in moving projects into partners' hands and creating royalties along the way. Not only do we do option agreements, we do for projects, we do what's called purchase and sale agreements, where we sell projects right away, selling 100% of the project. in exchange for cash and share payments and a royalty. So last year, partners spent approximately $20 million, 6 drill programs. So again, all partner funded money. Once we sell a project or option a project into a partner's hands, they are funding the programs the rest of the way forward. And so far, with respect to our prospect generation business, we have 4 drill programs that are underway or planned to be completed over the course of 2024. And in addition to that, with respect to our royalty portfolio outside of Silicon and Ermitano, we have another 3 drilling programs that are underway. So in total, we're seeing 7 drilling programs that are happening over the course of 2024 and gives us exposure to a broad range of projects and exposure to discovery opportunity, which is exactly what we want to see out of our business model. So quick corporate snapshot. I'll draw your attention to the graphic on the right. You can see sort of the breakdown of who owns Orogen. We are largely a retail story. Almost 50% of the company is held by retail investors. We also have Altius Minerals as a shareholder who holds 18.1% of the company. They've acquired those shares through private placements historically, through warrant exercises, and then also purchasing shares in the open market. Global Strategic Management, and that is run by Adrian Day, holds over 10% of the company now. Sprott Asset Management, this is the group out of San Diego, Rick Rule's old shop. They hold about 10%. And there's other institutional investors that hold approximately 10% of the company, and then there's insiders with 4%. Our recent market cap is $247 million, which gives us a share price of $1.23. Working capital, as I mentioned earlier, is about $19 million. There are no warrants outstanding in the company anymore. Shares outstanding 201 million. And then we have a range of stock options, RSUs, and DSUs. The company has no debt. So we're going to spend the next few minutes here talking about the flagship royalty assets, Ermitano in Mexico, and then Silicon in Nevada. So we'll focus on the expanded Silicon project first, and we'll take you back to 2014. And this is when the Renaissance exploration team out of Nevada identified an early stage exploration prospect that they had called Silicon. And I'll draw your attention to the graphic on the right, and you can see that this is a claim map. And there, within that claim map, there is a blue box, dotted box. That's what we define as Orogen's royalty area of interest. And this is largely the ground that was staked by the Renaissance team back then. And so they identified it as prospective. They worked up some early stage targets. They sold that project on to AngloGold Ashanti in 2017. And since then, they've drilled approximately 350 kilometers within that royalty AOI. Along the way, they identified the Silicon resource at 4.2 million ounces of gold, and then more recently identified the Merlin mineral resource at 9.05. So very, very impressive deposits. This area is still growing. There's still a tremendous amount of exploration activity going on the project. And also along the way, they expanded their claim position. They purchased lands from a company that used to be called Corvus Gold. They are now been purchased by AngloGold for $450 million. And then you can see the claims that to the south of the blue box, those were lands that were once held by Coeur Mining, and they purchased those claims for $150 million. So total investment price into the lands around or our royalty AOI total $600 million. I think it gives you a good sense of the scale and scope what AngloGold is trying to achieve here. These resources that have been identified are oxide resources, and that is significant in the fact that it's the lowest form of mining you can possibly do, and so oxide resources are very amenable to that. It calls for large-scale open pit mining. So a heap leach, and again, it speaks to the low-cost nature. And at this stage, AngloGold has identified a production profile that's greater than 500,000 ounces per year for many decades. And so, again, this is an evolving story. We're still trying to understand exactly the size of the deposits because we think they have lots of potential to grow. And we're also trying to understand sort of the production profile as it evolves. Back earlier this year, As I mentioned, Merlin was announced, 9 million ounces. You can see in the table below the breakdown of the various resources. You can see the total silicon resource at 4.2 million ounces. That's made up of an indicated and inferred categories. A lot of the resource at silicon is in the indicated, which is a higher confidence level of resources at 3.4 million ounces, and then 800,000 ounces inferred. At silicon, it is newer. At Merlin, pardon me, it is newer. It was announced earlier this year, 9.05 million ounces. And so it's really compelled Anglo Gold to spend a lot of resources. Last year, they spent approximately 75 million US in drilling. They drilled 129,000 meters, which is a staggering amount of drilling. It has become a very topical discussion with the Anglo Gold leadership. They talk about it a lot in every update that they do. But, to say that it's the largest new discovery in the United States in more than a decade, the grades are good for a heap leach operation. And this is one of the best jurisdictions in the world. It doesn't get any better than being in Nevada. And so I think, this is something that Anglo Gold has really focused on going forward. They've moved their head office to Denver now, and we're excited to see what the project's going to bring us over the next several years. So talking about some of the production profile, and this is a lot of the disclosure that we're providing in this presentation is taken from Anglo Gold's own public disclosure. And so we are trying to wrap our heads around a production profile that they've laid out. And we think that the mine will come into being somewhere around 2029 to 2031. It's not quite clear yet. They're going through a feasibility study, which we'll talk about here shortly. But the production profile that's laid out on just specifically Merlin today shows that in the first couple of years of the mine life, they will be having what's called pre-strip. That's taking the top layer, the uneconomic layer, off the deposit. So when you get at the lower deposit, which is the valuable part, the economic part, that the production profile will be tremendous. And so in the first sort of 2 years of production, plus you're going to see 3.5 million ounces of gold mined, 3 years. And from a royalty company standpoint, getting 1% of that is pretty impressive. And so you can sort of pick your gold price in there at 1% of whatever gets produced. And that is Orogen's revenue profile. And so you can see that in the first couple of years, it's quite impressive. It flattens out to somewhere between 600 to 800, 900,000 ounces per annum after that. And the one thing that we like to point out to people, this is Merlin only. This does not include the silicon deposit, and we don't know how that features or factors into this production profile yet. But as I mentioned, it's an evolving story. And in time, we'll learn as to how this all lays out. So very exciting. Over the next couple of years, Anglo Gold will be, the next year and a half, Anglo Gold will be focused on a pre-feasibility study. That study initiated earlier this year, and we anticipate, it sounds like, between midway to the end of 2025 when it will be completed. And so as it stands today, there's 10 rigs on the project. We know that from their disclosure last week, they completed 66,000 meters of drilling in the first half of this year, so very impressive. There are a number of trade-off studies going on. I think Anglo Gold is trying to find a way to go into production quicker. So they're focusing on key areas of the project, specifically with respect to a higher grade core of the deposit, which yields spectacular grades. It's very impressive to see. And so alongside that, there's continuation of hydrogeological studies, geotechnical work, and metallurgical programs. There is a deposit to the north of the Silicon area called the North Bullfrog. We do not have a royalty on that area. However, Anglo Gold expects to put that in to production somewhere towards the end of 2025. So there's a lot of early work already going on with respect to permitting, with respect to planning. And so there's a very large initiative underway on the project. This slide gives you a neat perspective on Merlin. This is a cross section of the deposit, and it shows you the extent that is approximately 2.5 kilometers wide, that pit. And you can see that there's a lot of different colors on there, but the important thing is to see is that there's a pit outline, and that pit outline is that dark, it's a black thick line, gives you an idea of how wide it will be, how deep it will be. The yellow and orange colors that you see are the mineralized core of the deposit, and specifically with respect to the orange, that is a high grade core. And you can see in some of that high grade core, the grades are very impressive. You're seeing over 100 meters of 7.3 grams per ton gold. In the disclosure, Anglo Gold announced earlier this week they've got an intercept of 144 meters, grading 10.5 grams gold. So really, really spectacular grades. This zone is open to the west, and there's been discussions by Anglo Gold of the interconnectedness between both Silicon and Merlin. And so it's still, I would say, in many respects, in its infancy. We don't know what the size of this deposit is going to be like. The openness of Merlin to the west can yield all sorts of possibilities. And as time goes on, we'll start to learn that. But certainly with 10 rigs that are drilling on site, it lends one to believe that we're going to find a lot more mineralization and a lot more ounces. So we're very excited by what we see with respect to the growth of the deposit. This is Silicon. I won't spend too much time on this. This is a little bit, I would say, more advanced than Merlin. This is another cross section. This is the deposit that's to the north. They have this at an indicated resource already. So until they get Merlin into an indicated resource, they probably won't spend a ton of time. But what we do know is that from the disclosure, there's 4.2 million ounces that are within that pit. There's also, and those are oxide ounces only. There's no discussion on the sulfide ounces that are within this pit, and no discussion of the ounces that are around the pit. And so as gold prices changed, we think that the opportunity to add additional ounces to the existing resource is high. Anglo Gold has indicated that there'll be milling operations in addition to a heap leach operation. So it's quite possible that the sulfide ounces, which we think is probably a couple million ounces sitting within that pit, may be included in a milling operation. So again, we expect to see growth in this in the future. Okay, we'll shift our view down to Mexico now. And so this is the Ermitano mine. This is in Sonora, Mexico, so northwest Mexico. This is a project that the Evrim exploration team out of Hermosillo acquired back in 2011. We optioned this project to First Majestic Silver. They made a discovery in 2016. And so the time from discovery that it went into production is only 5 years. And so that's a very, very quick timeline. And you can see that there's a claim map on the left. The existing Santa Elena mine, which is owned by First Majestic, operated for a number of years. And then the lands to the south and southeast are lands that were once held by Orogen, and we've sold them both now to First Majestic. The lands that the Ermitano mine sits on totals 167 square kilometers. So our royalty isn't just on the mine itself, it's on the actual entire land package. So that's an impressive thing. And then we've even got Kumobabi to the south, is truncated at the bottom, but it's even a larger land package. So we have a lot of exposure in this area, which is exciting. The table on the right gives you an idea of the reserves and the resources at Ermitano. The initial mine life in Ermitano was 7 years. And as that adds now into a third year of production, the 7 year mine life is based only on M&I resources. It does not include inferred resources. And so as time goes on, and we've seen this starting to happen, is that the inferred resources are being drilled and converted into indicated resources, which keeps that mine life kind of close to that 6 to 7 year timeline. In 2023, we brought in almost $6 million of royalty revenue from Ermitano. And this year is shaping up to be a very similar experience. And so we see sort of around a $5 million range for royalty revenue coming from the Ermitano mine. And for the expansion potential, and we'll talk about this because this just came out last week, is that First Majestic has embarked on a very large underground expansion and surface exploration program of the Ermitano and Santa Elena mine complex. In fact, it's the largest that they've ever had in the company's history. And so that has, I think, paid dividends. This was announced last week. We're looking at a bit of a close-up now of the Ermitano mine area itself. You can see within that blue claim, that is where our royalty AOI sits. The gray claims are lands that are held, other lands that are held by First Majestic. And you can see, looking down on that graphic, that there's a gray box. That is the existing Ermitano mine footprint. That's where the workings are. And a discovery has been made to the southwest. It is called Navidad, and it is very early on, but it looks very impressive. It's 6 holes. They've intersected multiple veins. It's deeper than what Ermitano is at. It's probably a fault offset from the existing mine. So it's about 750 meters below the actual mine deposit, the Ermitano deposit itself. However, as First Majestic enters its way through the ore body, through the underground workings, they'll be able to access this zone in the future. At least we think they will be able to. And so the zone itself is 750 meters long along strike. It's 225 meters down dip. So the geometry of this is quite similar to what we see at Ermitano. The widths, the vein widths are somewhat similar, but the grade is similar. And so we're very excited. Could this be another Ermitano, or could it be something close to it? Yes, we think it has a distinct possibility of being like that. And the important part of this is that it will add significant mine life to the existing resources and reserves that we already see. So we see Ermitano, instead of being sort of a 7-year asset, is to being something that's much longer lived. And we see that production for this could extend well into the 2030s. So we're excited by what we see there. So this slide gives you an idea of the Ermitano mine complex itself. This is an actual cross section, and this is focused only on the Ermitano mine. So it's broken into 3 categories: what they call display Ermitano, then there's the central Ermitano, and then the Ermitano Luna area. And so the display Ermitano area is where they're currently mining. You can see that there's a gray box. That's the mined out area. And then there's sort of a zigzag line underneath it. That is some of the underground workings that they've got. As years go by and they start to mine this out, they will move into other areas of the mine. There's the central Ermitano area. And then Luna was discovered in 2021, just as they went into production. So like Navidad, there is significant potential for the mine to expand and for additional resources to add to the life of the mine as well. Okay, so that's our key royalty assets. Now we'll talk about a bit more about the nuts and bolts of the company, the organic royalty generation. In behind the scenes, which people don't necessarily see on a day-to-day basis, is sort of the efforts that we make to sort of keep new projects coming in, to get projects moved into partners' hands. We view it in many ways, it's like a treadmill. You get projects in the front end, they go through the life cycle of exploration, and then by the time you get to the end of the treadmill, either a project has become successful, you've created a royalty, and hopefully there's a production, or there's a discovery that's associated with that, or the project, and which happens most of the time, the project has not proved to be of economic value, and it goes off the treadmill and we restart again. But that is the high stakes nature of our business. What we try to do is mitigate risk at every point along the way by employing the business model that we do. So we have the hot tip property that was staked late last year. We're now in the stages of marketing a project like hot tip. So any project that we bring in the front door is worked up to a drill ready target, and it is then sold off or optioned off to a company. And then projects like Astro, Gilbert, Cuprite, Ball Creek are all then moved into partners' hands. And these companies are at various stages of exploration. whether it's through drilling, whether it's through just additional drill targeting. All these projects are at various stages. And the nice thing about every project that we move into partners' hands, it can be sort of the next value creation component of the company. And so we like to think all of our projects as having a high amount of opportunity to become that next value creator. So when people always ask what your favorite project is, we don't have one. We like all of our projects, and any one of them has great potential to have that big economic discovery. And then finally, on the other side of our business, on the acquisition side, we have projects like Rica, and we'll talk about that because I love Rica. I think it's a fantastic exploration opportunity. We have a royalty, and that's one we bought off a vendor in Colombia, and so we'll talk about that. So looking at what our royalty creation business has done for us, it has created 25 royalties. A lot of that's concentrated in North America because that is where we do our prospect generation business, specifically in the West. With respect to the other royalties that are around the world, we've acquired those royalties. And so we bought 3 in Kenya, Western Kenya, a couple of years back. We bought the Rica one a few years ago, and then there was some Argentinian royalties that were purchased or that were created through another transaction probably about 7 or 8 years ago. So the royalties that we have abroad are the ones that we focus on buying. The ones that are specifically within North America are the ones that we create. So royalty AOI is approximately 2,200 square kilometers. Gives you a sense of the coverage of some of the size of the projects that we have. Last year, over $100 million was spent by project operators on these royalties. And that is a very significant amount. And I expect we'll see somewhere in the range of that again in 2024. So zeroing in on Nevada for a moment, this is, as I mentioned, sort of the nucleus of our activity. It is, as I mentioned earlier, one of the best jurisdictions in the world to explore. Mining is well understood. Permitting, which in every jurisdiction is takes a lot of work, takes a lot of effort. But I think with respect to the state of Nevada, they understand mining. And so permits can be obtained. Mines are getting built. It's a great place to be. And it's one of the best jurisdictions on earth for gold exploration and gold endowment. There's nothing else quite like it. And so you can see that we have a fair bit of coverage in the state. The table on your right gives you an idea of what is already been created in terms of a royalty. Those are the gold dots. The blue dots that you see there are projects that are partnered. So those are the joint ventures that we've got. A lot of the metal within that is all these is primarily gold. We have one copper project that's been partnered out to a junior private company. And then we have the burgundy or the red dots, which are projects that we have generated, and they are available for option or sale. And a lot of the projects that we're doing today, that we're generating today, are what we call silicon analogs. Our team had a very distinct and proprietary way of identifying the silicon project. And if I was a geologist, I'd spend a lot of time talking about it, but that's better left said for the experts. But we do have a methodology that identifies these targets, and we have been busy over the past 2 years now creating targets like that. So projects like SELTS, projects like cuprite, projects like hot tip are ones that are being generated in the same way. SI2 is another one, as we identified the expanded silicon project, which, as I mentioned earlier, is over 13 million ounces now. And so this is it's a fantastic place. You've got great partners that are in here, both private, junior company, and major company level. So we'll spend a little bit of time talking about Rica. This is probably one of my favorite royalties within the portfolio. This is a project that we picked up last year. It's a 1% NSR royalty that we bought from a an individual, a private company actually, in South America. We spent 1.75 million US, which is our largest cost to date for a royalty. And what's interesting about the project is that it's undrilled. And a lot of people asked us, why would you spend that amount of money on an undrilled exploration target? This project was identified, or target, I should say, was identified in the late 1960s by the United Nations and the Colombian Geological Survey as a very prospective target to drill. And if you can search on a lot of academic papers within this region, a lot of groups identify this project as being one of the best undrilled targets within South America, or within the world, in fact. And so it's a really interesting project. There's a 15-kilometer long trend of copper anomalism. It's right to surface. There's been various operators that have owned this over the years, mostly major mining companies. And with respect to some of the civil and social issues that have taken place in Colombia over the past 50 years, it remained undrilled and kept companies away from advancing exploration. And so since the government has changed and the peace settlement process has gone on with FARC in the region, you're seeing a renewed sense of a renewed entrance into the country by senior operators. During the time that the peace process was going on, a private company came in and acquired a very large land package. Rica sits at the very north end of what they call the Mande Batholith, and we expect that this private company, who is a collection of ex-senior mining company executives, they're a very responsible group. They have an excellent shareholder base. They're very well funded. In fact, I think their exploration budget probably rivals that of a lot of senior operators in the world. So they have a real intent to see this project. And our hope that by the time we get to sometime in 2025, midway towards the back end in 2025, this project will be drilled. And if they hit what we hope they will hit, I believe that this project has the leverage to become a silicon-sized type value asset for us. And obviously that's a very forward-looking statement without the fact that there's no drill holes in the project today. But these types of projects just don't come along very often. And so we're very excited to see what this project will do for us over the next while. So investment highlights. Look, I think we have a unique business model. It's different from the other royalty companies. You won't see Orogen getting involved in processes, as I mentioned. So there is quite a differentiation from the traditional royalty company who go and just buy royalties. We have cash flow and stability from Ermitano. Orogen and the predecessor company Evrim have not raised money since 2018. So our shareholders have been kept whole, and we will endeavor to continue to be like that. The growth from the world-class silicon, or expanded silicon project, as they now call it, will continue to add a lot of value as time goes on. And then obviously, as I mentioned, there's significant optionality through our exploration portfolio, and any project can be that next value creator for us. And so the catalysts that are coming forward, look, expanded silicon project is being talked about by Anglo Gold every quarter. We saw this in last week when they talked about the fact that they had drilled the 66,000 meters, that they encountered some fantastic mineralized intercepts at Merlin, and the fact that there's 10 rigs still on the project. So that says a lot. The Ermitano reserve and resource update that came in Q1 of 2024 was great. It had converted a lot of the inferred resources into an M&I status. And so we see that 7-year mine life is always being sort of a 7-year mine life, and that's exciting. The 4 partner-funded drilling programs with our optioned projects, along with 3 drilling programs with our projects that we have royalties on. So 7 projects this year, so lots of activity going on with the company. And look, we have a portfolio that allows us to be what I would always say, very Altius-esque type of approach. We try to invest into opportunities when the markets are low and when possibly nobody else is looking, and that's what we believe provides significant leverage to value. And we have a balance sheet that we can support that. And that's our presentation.
Could you just tell a bit more about your career? Where you started out and how you came to be with Orogen.
Right. So, look, I'm not a geologist. I think I might have mentioned that in my presentation. But look, I've been surrounded by a lot of good geologists over my entire career. From my early days, I learned a lot from people. I've spent my early years working in exploration camps throughout Western Canada, Alaska, Yukon, British Columbia, and then use that. Look, when I was doing all that, it was a fun time. I loved it. That was back in the day when they kept geologists in the bush for like 6 to 8 weeks at a go. And as much as I love being out there, I'm a city guy. And so being out there for that amount of time as a young person, I was sort of missing the social life, and realized that back then that probably geology wasn't in the cards for me, but I loved the business and it was a fascinating business. And so when I got out of university, I have a degree in economics, and decided that I would try to focus on the business side of the industry. And so a lot of the guys that I'd worked with as a young person in exploration camps had started some of their own public companies. And so they brought me in. And from those early days of meeting the financiers, meeting sort of the people within the business, sort of helped shape my career. And so there was a time that I worked with a consulting firm, and we had run, I believe, 6 of these companies at once, all single asset focus, drill it to kill it type of thing, but good projects, like great projects. And some worked out, some didn't. But when we got through the financial crisis in 2008, I realized that I wanted to get some focus. Being stretched out across 6 companies, trying to fund them all, especially when times are tough, becomes exceptionally difficult. So I thought I'd try my hand on focusing on one company. And so I left my partnership behind and started what's called Evrim Resources in 2011. And so we had acquired a series of projects in Mexico. We got a team of people, sort of a turnkey operation. And we started out, instead of drilling our own projects, to work them up and sell them into partners' hands. And that's how I got involved with the prospect generation model. And so through those efforts, that's when we found Ermitano and knew that we had a discovery. Along the way, we thought, well, can we use Ermitano as leverage into buying something else? Because we clearly wanted to grow beyond just the prospect generation model. And so we found Renaissance Gold, who we knew about in Nevada. They have a very successful track record from their previous company called AUEX in Long Canyon. They had a great group of people, and they had a really interesting portfolio of projects. And one specific one was called Silicon. And we had heard that there was a number of drill rigs out on the Silicon project, but there was no news coming off it. And so we pitched the Renaissance team of combining the companies together, balancing out the early stage, or the Ermitano royalty that provides a tremendous amount of stability while we watch the Silicon asset grow. And there's risk, obviously, because we weren't sure if Silicon was how big it was going to be at the time. Could have been 1 million ounces, could have been 500,000 ounces, or it could have been 3 to 5. We didn't quite have eyes on it being this big. But certainly that was sort of the plan. And look, the plan has worked out wonderfully. We put the companies together in 2020 and turned that into Orogen Royalties. And so we are a royalty company, but we still have that early stage prospect generator component to our business, which is the bread and butter of our business. It's Brian Dalton, he likes to call it the goose that lays the golden eggs. And so that is sort of the key component of our business, and that's what's taken us forwards to today.
And of course, our audience is familiar with Altius, and they are your largest single shareholder, right? And
Yeah,
you've known Brian for a long time, to my understanding, since university
yeah,
probably.
yes,
And
yeah.
how did the background to Altius becoming a shareholder? Of course, they have their own NSR at Silicon. Can you just describe how these entities interacted in the past?
Yeah, so Altius has acquired or received shares in the companies in a variety of ways. There was a predecessor company called Callanan Royalties that had done some alliances with both the Evrim company and with Evrim and with Renaissance Gold, and so basically the group that was behind that was a individual by the name of Roland Butler. He was one of the co-founders of Altius back in the day, and so he had by that time had Callanan Royalties. He had funded both companies, and they had received shares for those endeavors. And so along the way, um, Altius also picked up shares through private placements. I'll back that up one step. Around 2015-16, Altius acquired Callanan Royalties, and so that's how they ended up getting the ownership of the companies at the first stage. They also participated in private placements in those companies, the predecessors to Orogen, and then more recently, Altius has been acquiring shares in the open market. They're now at 18.5%. They're almost tapped out. They can't really buy much more that would ultimately take them over 20%. But that's really how they got their share ownership. And they had some warrants through the private placements that they took those down too. So that sort of kept them at the level. But they've been fantastic supporters. They were once very much like our predecessor companies, prospect generators, and they still do that to this day. It's a tremendous business model, and obviously Altius has evolved much beyond that nowadays. But still at their base core is they've got a team that does stuff very similar in the manner that we do it.
Yeah. And we always like to ask it just directly to yourself. I mean, how much of your sort of liquid net worth is allocated with Orogen, and how do you more broadly incentivize Steve? Of course, this is your company; you've been here for a long time, so you're incentivized in that regard. But always just kind of personal investment, and also how do you incentivize all of your key people at the company as well?
Right. So my life this is my life. And I'm betting a lot on this. So most of my or a significant chunk, anyways, of my net worth is tied up in Orogen. And it's why like everybody else in my company too. I think there's a few of us that own bigger chunks, and they're very meaningful chunks. And so that's why we are more or less pretty well all of us. This is my only thing. I don't have directorships elsewhere. I don't have management contracts in any other company. This is my sole focus. And so it helps you kind of refine your efforts very easily when this is your sole focus. So that's really good. But with respect to myself and my team, obviously we have there's an option package that we have. There's an RSU, DSU package that we have. All of it is predicated on key performance indicators, KPIs. We have an annual review of goals and objectives where we meet our targets and not, and that really sort of dictates option packages and RSU packages and bonus packages and stuff like that. So we do have key metrics that individuals have to strive for, both corporately and individually. And that is reviewed by an independent panel each year. And I think it's worked out well. I know that a lot of junior companies don't typically have these types of I mean, a lot of groups have options and that sort of thing, but they're not necessarily tied to performance. And so we make sure that every year that is paramount to be able to earn what we got is based on how hard we work. And our team works pretty hard.
Yeah, and you're a small team, so please just highlight how the team is structured corporately. right now as well.
Right. So I'm the president and CEO. And then beside me, I've got Mark Tran as my CFO. He's based in Vancouver. And then my VP corporate development is Marco Locascio. He's based in New York. We're actually spread all over the place, but that actually I think that's an advantage. And then our exploration lead is Laurence Pryer. He's our VP of exploration based with me here in Vancouver. We then have a team in Reno, which is Mark Kulba, and we'll talk a little bit about Mark in a moment here, and Eli Turner, who's also based down there, geologist. Half the company are geologists. And then down in Mexico, we have Ignacio Camarena. He's our exploration manager in Mexico, and we have Wood Administrator Gloria Guerrero down there. And then with respect to the admin team, corporate secretary is Rosanna Batista, who helps run the office. There's a lot of, you'd be surprised as to how much administrative work there's associated with running a royalty company. I didn't appreciate that when we got it going. And then putting that alongside a prospect generation model with a ton of agreements, a ton of dates, which things come due, like it's a lot to track. And so hats off to the team. And then we have Saki Tamatsu, who supports Rosanna in a lot of the things that go on administratively. And then we've got a couple what we call consultants, geological consultants. We use them not all the time, but from time to time, they provide geological expertise, or they provide logistical expertise in a lot of the areas that we work in. And so we have a full-time staff of around 10. And then we have 3 others that kind of help us on an as needed basis. So that's sort of the team. And you know, the exploration team, we are young, and which I think is a great thing, because there's a lot of creative thought that goes in there and a lot of horsepower. Both Laurence and Eli are pretty young guys, but look, they've got a tremendous amount of enthusiasm. They're very, very smart people. Mark Kulba is, and along with another gentleman by the name of Mark Backness, are sort of, I would say, the mentors to the young guys. Both Mark, we call them Mark and Mark, they've been in the business for decades. In British Columbia, Mark Backness credited with the discovery of what's called the Wolverine deposit, and he received an award for that a number of years ago. But an exceptionally bright porphyry gold geologist. He's great. He provides Laurence a tremendous amount of support. And then in Mexico, Mark Kulba, you know, if there was one person that I would say should be credited with the providing the kernel of thought to go explore silicon, it's Mark. And it's his process, it's his proprietary methods that actually created the silicon opportunity. Yes, Anglo Gold went and drilled it. They were the ones that made the discovery. But it was the initial thought process that someone thought there should be a nice gold deposit here. That's Mark Kulba, and he deserves all the credit for that. So we have that type of team. And down in Mexico, Nacho was with the group that discovered or created the Ermitano opportunity as well. And so you've got this group. They all believe in the model, which I think is rare, because a lot of geologists are the type of ones that want to drill projects, and there's a lot of that in the industry, and there's nothing wrong with that. But that's what it's hard, I think, for geologists to tell them to come up with an idea, and then you go sell that idea to somebody else and let them drill it. And drilling is obviously one of the most important aspects of exploration. And when you see another group do it, it's kind of hard to watch. So I can sympathize with some of our geologists when they see some of their neat sort of pet projects going out the door, if you will. So credit to them for believing in our business model. But yeah, that's our team. And look, I think on the corp dev side, the admin side, they're Mark Tran, CFO, exceptional for tax planning, deal structures, that sort of thing. And Marco brings a really unique background. He was a former fund manager at Equinox in New York, and has a really broad based knowledge of the industry. He's probably looked at a lot more, I would say, higher end assets than I ever got to look at in my career, just because of the nature of being a fund manager. I've always been down in the weeds, if you will, looking at early stage projects. So he brings a really neat perspective and interesting relationships to the team.
Excellent. And then I think, I mean, of course, it's always important to highlight the kind of the cost structure. You have a small team like this, and you punch well above your weight, of course, and that's the attraction of the royalty model, and even more so with the PG model. So, if we kind of separate out the PG activity entirely, first of all, so if we exclude PG and you just look at the all the other costs within the companies, all the other G&A, what does that look like on an annual basis?
Annual basis, it's probably 3.5 to 4 million a year, depending, on exactly what we're doing. But that is, I would say, as a comparison to a lot of the other royalty companies out there, exceptionally low. We have three jurisdictions that we operate in. On an administrative basis, it's not cheap to do, and so that's it. But our revenues, like last year, we did 6 million almost in royalty revenue. We did 1.8 million in prospect generation revenue. When you factor in the PG side of the business, it's probably around 4.5 all in. So that's kind of where the PG stands. And look, these are all costs that are net before recoveries. And so we do alliance work with groups like Altius, and we recoup some of those costs throughout the year. But on a gross basis, it's probably 4.5.
All right, so we're here with Laurence Pryer, VP Exploration over at Orogen Royalties. And I think, Laurence, it would serve everyone well if you just kind of introduce who you are and how you came to join Orogen and your career prior to that.
Yeah, so as you can probably tell from the accent, came out of the UK. I did an undergrad and master's at Cambridge in Earth Sciences, which, while being very academically rigorous, didn't necessarily get me much of a footing in the exploration industry. So following that, moved over to Canada and did a PhD in economic geology focused on mid-Cretaceous Yukon and how the tectonics have impacted metallurgy of the region. And it was through that I connected with Evrim, the predecessor of Orogen. They had a generative alliance with Newmont out in the Mackenzie Mountains where Yukon and NWT meet. They were looking for someone who knew the regional area well, could operate there and knew the rocks, and got given my contact info. And that was 7.5 years ago now. And I've been with the company since then, moving from just managing a single project, operating through most of BC, and now being the Vice President of Exploration for the whole of the operations on the western side of America.
Excellent. And I think, of course, our investors are familiar with the PG model, but it would be interesting to hear how it kind of works for you guys specifically. Maybe you can relate it to the team and kind of give a broad flow of the process for you guys.
Yeah, so the ultimate goal of the PG model is to develop royalties at net zero cost to the company. The way we do that is either by staking or acquiring prospective targets identified by the team. We have offices with technical geos in Vancouver, Reno, Nevada, and Hermosillo, Mexico. Proprietary data, boots on the ground, and hopefully using as up-to-date modern geoscience as we can to identify these properties, and then try and sell them on to partners who will advance them for cash, equity, and most importantly, that royalty interest. I think the key thing with the way we operate is the PG business stands alone as a profitable entity within the broader company.
Yeah, for sure. And I think it's always useful because you guys, of course, have and also on the royalty side of things, if we compare to say Altius, they as actually try to transact producing royalties, which is something that you haven't done yet, or you're unlikely to do. So your entire focus is actually both the royalty acquisition side and on the generation side to evaluate early stage projects, pre-resource. Sometimes I guess you would have some data, but usually quite fairly low data density, I would assume. So could you kind of just describe that your process, I guess specifically on the PG side of things, and then we can ask the same thing for royalty acquisition, but just the evaluation of projects, that early sort of screening part of the process before you decide to pick up a project?
Yeah, so, specifically for the prospect generation side, we look at a variable number of deposit types and commodities, both gold and copper being a principal focus, across a number of belts. The major thing I think we look at is, we see ourselves as storytellers. We're trying to get the potential partner to believe in the story. So we have to believe in it ourselves. We have to see the sort of proven nature of the deposits around us to show that they're analogs for the scale and size that we want. And then ultimately we have to see indicators that we are at the high levels or on the side or deep within the system, and that there are vectors into that mineralization that we can clearly sell a target for the partner to drill. And then, the most important thing for us is we're not looking for that small little payment. We need to see a clear development pathway. We don't want to sell something that's going to get strangled in the permitting stage. We want to sell something that's going to be an easy movement through to a royalty that can add meaningful value for the company. So kind of a combination of where it is, the geological potential, and then the social license and development potential of the asset.
And in the average case, I mean, how much does it play a part where you guys reinterpret and actually kind of reconfigure the data? Is that most of it, or and how often is it that you actually do some work? I mean, do you actually go in and do soils or do some add-on? You increase the amount of data before trying to transact. What's the most common path you would say?
Really, we do both. In the case of the BC porphyries, which we look for, so often there's shallow drilling and it's been kind of explored to a certain stage. And we find one of the best value adds we can do is go back in, find that old core, reinterpret it with a modern understanding of mineral systems, and therefore develop targets. And it might not require us to do much work beyond relogging the core and retelling that story. Whereas with some of the epithermal systems that we've been developing in Nevada, we're doing that first pass identification from mineral mapping, and then it will be boots on the ground, collecting rocks, collecting hyperspectral samples, collecting soils. And, I think we will do geophysics on our own property, depending on the target we're generating and the scale, but we'll never drill. But we do both sort of reinterpretation of historic data and our own data generation.
And generally, you try to transact. I mean, it doesn't necessarily have to be drill ready, but for as close to it as you can get for reasonable sums of capital, I would say.
Exactly. The goal is to sell a target that it has a red dot on a map or a number of red dots on the map ready to drill. Occasionally, we'll even permit those drill holes, but doing the minimal amount of work that we can to get to that drill ready and marketable phase.
So if we think about sort of the cost to get there on average and the time to get there to the marketable phase, what would you say is the usual sort of parameters for that?
It's so variable depending on the deposit type. Going back to the epithermal targets in Nevada, we've found it relatively easy to generate those and market them with quite minimal investment, a little bit of mapping, a little bit of rock sampling, and we've been able to get some of those targets to a stage where juniors have picked them up. Porphyry targets more complex. It could be a couple of years of development and soil sampling and potentially geophysics, but the prize there potentially is also bigger. I think for an example of a very quick one, the Cuprite project that's now with Strike Point, between identification and the partner drilling it was about a year. But some of the porphyries in the portfolio have definitely taken 3, 4, 5 years to get them to a point where we can attract a partner.
Right. And then sort of, because to some extent it is kind of a volume. I don't want to say it's a volume game because that's not true. Of course, you have to put in a bunch of effort and do a bunch of screening and disqualify a lot of projects. But you need to have, because the success rate is not big even for the best of ideas. So you need to have sort of get several projects through to generate that Ermitano or generate that really big success for the company. So what's the sort of the average, and this varies of course, but within a year, what's the range of sort of projects you're able to generate? And it depends, I understand that on the situation, but what would you say is the volume?
I think The way we look at it, Gorm, is more about a sustainable portfolio size. And one of the things that differs us from other groups operating this model is we have a very small portfolio of projects at any one time that we're trying to market. We believe internally that between 5 to 8 is the optimal number for being able to effectively market, bring in a partner, and be able to develop these assets. So rather than trying to set a set number, it really depends on where the portfolio is at. In 2021, 2022, when we were doing a load of deals and we couldn't keep projects on the shelf, we were working as hard as we could to generate new projects. And I think in that year, we brought 6 additional projects from the pipeline through to a marketable phase. But at the moment where we've seen deal flow slow a little and we've seen a lot of projects return to us, the focus becomes far more on enhancing the quality of the project within the portfolio rather than necessarily adding more and more and more projects. And it's this focus on keeping that portfolio number small that allows us to be profitable within the PG business. And it means a lot of hard decisions. There are a lot of projects that we like that ultimately get cut or don't make it because there are better projects within the portfolio. So it really depends on where we kind of are within that cycle and the market scenario. But this year, we'll probably only bring 1 to 2 assets into the portfolio.
You said that you're seeing some more opportunities right now, but could you kind of describe what your expectations would be in the next year or so, or even a short time from you, if you prefer, depending on visibility? But what is your sense right now, where you're at?
So one of the major focuses we're working on at the moment is trying to secure a generative alliance. This is sort of a different factor of the PG business where rather than taking a specific project or land position, we take a larger regional belt scale idea and try and partner it, normally with a major company, to do regional exploration that will then lead into a project. We feel with where the market's at and the appetite of majors, it's a good time. And we've been putting a lot of effort into trying to secure one of these. I'd hope by the end of the year, we might have one of those partnerships. We have a history of doing this. We did a large regional program with Newmont in the Mackenzie Mountains. The one that I was first brought on with, we've done them in Mexico with companies ranging from sort of Vale, ArcelorMittal. So there's precedent for this. We also have CAs on multiple projects, so hoping that one of those may be vended. And internally to the portfolio, there are drill programs on 7 of our early stage either optioned or royalty programs this year. So I think we're hopeful we'll see exciting partner news while potentially securing new deals. And if we can get one of these alliances, it would be a real win for the company.
I guess we'll kind of switch over to sort of investment process, your process, and a bit more on the philosophy that you guys have. You've already covered it to some extent, but so if you just classify what kind of stage of project do you focus on, and this is not with the PEG model, with royalty acquisition, is it sort of pre-resource? What do you tend to look at more? Of course, you guys don't try to buy producing royalties; you don't want to compete there, but
so it's a good question. I think we look at a lot of different opportunities. If we ever found that diamond in the rough where, look, there's a project that's about to go into production, nobody's looking, nobody knows about it, we have not found one yet. But if we ever did, we would jump all over that. But waiting for that type of opportunity is probably not the best thing to do. What we do is that we focus on, as you said, early stage, typically pre-discovery. Geology looks good. The people that are involved in it are good. The jurisdictions, you have to manage that as best you can. As I pointed out earlier, we've bought royalties in Kenya and Colombia, and I think historically those countries were probably not well thought of in terms of their geopolitical landscape. Things have changed, and things do change. And so you have to be current with the movements within those countries to understand what is actually going on. And so, Colombia, I think a lot of people raised their eyebrows when we bought something there. But look, Colombia's made some tremendous strides over the past 7, 8 years, 9 years now. And we really like what we see. And I have a lot of faith in the group that currently has the projects where our royalty sits down there, and so it's that type of thing. So the three big things, I guess, is geopolitical, team, and then opportunity are the sort of the three criteria that we look at. And if we can get comfort on most of them, then we try to transact. And yeah, it's sort of that thing. And so Marco, he's sort of our go-to guy on bringing in a lot of these royalty ideas. We get inundated with royalty processes. And so over the past year, we've tried to get away from some of those because you can spend a tremendous amount of time on any given process. And we have such a small team, it sucks our time. And you can only find so many consultants to try to help you with this. So we've really, over the past couple of years now, ignored those processes and try to generate our own ideas and do our own research. And so there's a lot of sleuthing, a lot of digging that we have to do through databases, through publications, through news outlets, to sort of find these opportunities for us. And so for Marco, that takes a lot of his time to try to find these and think of interesting ideas.
So the screening process, it sounds like it's mostly on Marcos's sort of plate to look, and primarily you focus on smaller deal opportunities, right? Because you currently have, what is it, like 15 million in cash or something like this, or in working capital?
Yeah, 19 Canadian.
19 Canadian, right? So yeah. So you're looking at sort of a few $1 million US type deals, generally speaking. I mean, for you guys to use equity or debt to buy a producing, that would really be a freak anomaly, I would venture to guess.
I don't think so. Yeah, that would be, I think that's a good way to describe it. It's sort of those 1 in a million things. And we have seen opportunities like that. And as soon as we try to bid on it, it's in the royalty seller or the company's best interest, if they're trying to sell a royalty on an existing mine, is to bring in as many bidders as they can to maximize their take on it. So we have yet to see where we can go in there independently, quietly, and acquire royalty when no one else is looking. It's we kind of did that with Silicon, but it was during COVID and really nobody really was looking. But at the same time, there was no data to be had in the market, so nobody really knew anything either. So that was a very different type of transaction, and it was more of a friendly combination of companies that saw the world in a similar manner, as opposed to one taking over the other. That's not what it was like at all. So we do focus on the earlier stage things. So Marco's sort of got his sites trained on sort of those types of opportunities. That's but in the bite size is probably in that couple $1 million range. If we found something really unique, you could go up, maybe do 4 to 5 million, but to put half of our treasury at risk on one transaction, it would have to be very compelling for us to do that.
And in terms of diversification, of course, you guys are mainly a gold, silver type exposure through your royalties and in your portfolio, but you do have some copper ideas also in the portfolio. Do you look at other metals, or have you constrained yourself to precious metals, generally speaking?
We do. I think historically, especially with the predecessor company Evron, we did a tremendous amount of copper exploration within Mexico. The what they call the Laramide Porphyry Belt that extends into northwestern Mexico is a tremendous area. Cananea is, I don't know, it's been the top 5 copper producers in the world. It's been going for 100 years. Probably will go for another 50, 60, 70 years. Amazing. We were in there searching for copper targets. We had last year a joint venture with, or an option agreement with BHP on a very interesting target down there. And then up in British Columbia, northwest British Columbia, the Golden Triangle, as they call it, it was all porphyry exploration. So we've got option agreements up there with groups like Kingfisher. We historically had a joint ventures with Antofagasta in British Columbia, and we've sold some assets to other groups as well, some juniors. So we, within BC specifically, we do a lot of porphyry exploration. Today, though, gold, especially in Nevada, is sort of getting a lot of the focus. And so we do have much more of a gold look to us, even though we do other base metals. We don't do, other commodities like uranium or nickel, although we would be interested in that. Zinc, and we are starting in on polymetallic targets. One of the projects we just picked up here this year called TCS, which is a British Columbia located target, is one of those types of deposit or models. It's a VMS target, polymetallic.
Yeah, and that makes total sense, right? Because I mean, if you have expertise, broad-based geological expertise in porphyry exploration and so on, you have to utilize. You can't just say no, we're just going to be a gold, like a pure.
No, that's
make
right.
any sense.
That's right. But everybody does associate it with us being a gold royalty company, and that's okay. Look, if Rica, for example, is a copper target in Colombia, and if that became a huge asset for us in the future, well, people will just they'll call us a copper and gold company, I guess. I don't know.
And you mentioned market timing. I mean, you have sort of the same mentality as Altius. You try to be counter-cyclical. And generally speaking, for me, it's not a very big concern for you guys, because you don't deploy like big pools of capital into buying assets. So generally, you won't make any big missteps. So, I mean, you're always active. So in some periods, you generate more PG, prospect generation. Some periods you don't, and some periods you make a couple of more, couple of $1 million acquisitions, and some you don't. But you can just highlight how that kind of factors into the corporate mentality.
The model is, you pointed out, it's very flexible in that regard. Like you're not always committed to doing one certain thing. And in periods between sort of 2021, 2022, and into 2023, early 2023, I would say we were selling our portfolio at a tremendous pace. Every couple months we had a transaction. So haven't seen sort of the pace of project sales like that, at least in my career, before. So that was really neat to see. Now it's flipped. Capital markets for the juniors, for startups, is pretty scant these days. You're not seeing a lot of money getting raised. And so the capital available for groups to pick up new projects is not there. However, in times like this, especially in the junior space, a lot of groups become prospect generators. They're trying to sell projects. They are trying to find a partner to help them fund their project. And so you see a lot of companies out there you're competing alongside to sell projects to. But in that sense, it's also an opportunity for us, because you can pick up really good projects for cheap. And so that's what we're trying to do these days, is we're trying to find early stage exploration opportunities that others have worked on that have stalled out and they can't afford to take it on any longer. So if we can find an asset like that, that would be wonderful. We've done this before. We picked up the Ball Creek project in Northwest British Columbia that we've had Antofagasta on, Golden Ridge on. Now we've got Kingfisher and P2 Gold on. And so that's brought back much more money for us than we ever put into the project. Axe is another one down in south central British Columbia. We bought Axe in 2015 for $40,000. There was a lot of existing data from a senior producer that they had created, they did not utilize. So we had the opportunity to take that data and turn it into targets. We had a joint venture with Antofagasta on it. They came and went, but we got some cash payments out of that, which made the acquisition of the project profitable. And then 2 years ago, we turned around and sold that project to Kodiak Copper for 950,000 shares, which at the time the transaction value was about 1.4 million. And so it goes to show you that investment in times when they're tough, if you have the patience and the conviction to hang on to some of these targets, can pay off exceptionally well. And today, with respect to Axe, we've made well over $1 million. We've clipped a 2% NSR, and right now Kodiak Copper has a 10,000 meter program on their adjacent project, and also on the project that we sold them. So it gives you an idea of what you can do when times are tough, and what it results in down the road for having that patience.
And then in terms of royalty acquisition, generally speaking, what does your due diligence process look like? Okay, so you screen out an idea, this looks interesting. Of course, it varies from case to case, but generally speaking, what does it look like from identifying an opportunity? What do you guys do
Well, the early stage work is a lot of, you read the royalty agreement to make sure that it's properly done, it's real. You want to make sure that, we investigate the operator to see if they're a credible group. You do a lot of geopolitical work. We bring in every sort of acquisition we've done to date, geological expertise to weigh in on sort of the belt, the size potential, the work that's been done to date, through whether it's drilling or some other thing, and just having a view on what the project might bring. And so we package that up into sort of three categories of legal, geopolitical, well, I'd say four, the operator, and then the geological potential. And so you wrap those up into sort of a score, if you will. And if it gets to a certain score, it's something that we tend to focus more of our time on. Depending on the cost, we bring the board in, and they also weigh in on it to give it, because they're ultimately responsible, as are we. And so they want to make sure that they're doing the best interest for shareholders. And so they weigh in on it too, to make sure that management's done its job on a due diligence basis. And that's really how it goes. And so these processes can sometimes, they can take as quick as a week, because you quickly realize that a certain royalty is not for you, and you pass on those things as quickly as you can, and could be a variety of reasons, from risk or geology. Or, these things can take a month to 2 months sometimes, depending on the ability to get data, the availability of people to work on these things. But yeah, so it's varied, but the real components is always going to be geopolitical. It's going to be operator. It's going to be the legal side with respect to the royalty agreement, and then geology. Those are sort of the key things we look at.
You generally don't try to engage in creating new royalties. I mean, if you engage an operator, identify an asset, and then create a royalty like that, I mean, that's not prospect generation.
There are those opportunities, and we've had groups approach us. We've approached groups to try to create royalties on existing projects. Sometimes that's well received. Sometimes it's not by the group that we're approaching. But yeah, we have done that, and that requires a bit more of a deep dive, because typically those types of companies, especially if they're at an advanced stage, there's a lot of drilling data. There's sort of engineering, economic data that you have to go through. So that's a different process in and of itself. And that can take a fair bit of time to go through. So yeah, you're right. There are those types of transactions too, and that's one that we have not done yet.
Yeah, so but that's not really your bread and butter. The bread and butter is to go with the sort of generally pre-discovery sort of opportunities where there is a royalty that exists already.
Yeah, we have been approached by groups in the past to say, look, we got this project, we want to drill it, we need money, we'll give you royalty, and you quickly look at the project, and either it's just simply the geology is too risky. We're not saying the project's bad, but it's just, for us, it's too risky. And then you put that alongside geopolitical issues, potential management issues, especially if you don't know the group. It's, you've got to find out about them and that sort of thing. And so there's all these other things. And, with the geopolitical side is tough, because every country's got its own way of doing things. Some countries have sort of state royalties that they apply or royalty tax that they apply. And other projects are already encumbered with royalties, and you just simply can't keep layering on royalties on an existing project, because then it's at a certain point it's going to become economic. Just doesn't matter how good the project is, if you've encumbered it with so many royalties, it's not going to work.
Maybe we could use Rica here as an example. It might be a bit of an odd case, I guess, but if we look at and that was a fairly recent royalty acquisition on your part, and it's pre-drilling, data density is not super dense to my understanding, at least. But what if you describe that process of due diligence, and kind of maybe you can make it to a broader example for royalty acquisition? How does that usually work for you guys? What's the cases that you like? And
it's somewhere where I feel we can operate differently to the other companies, because you can't do net asset value calculations or discounted cash flow models on these early stage assets. What we do is a very similar process to what we do in PG. We look at the belt, we look at the potential, we look at the other systems there, we look at the geology and the data that exists, and we almost compare it back to the projects that we generate ourselves and say, if this was a project that our team had generated, how would it fit in our portfolio? How much money would we have to spend to have generated this ourselves? And if the target stands up and you look at it, and going back to Rica, I would love Rica in the portfolio. I would stand in front of any major group and try and sell that asset as an opportunity. So therefore, to us, acquiring the royalty made a lot of sense. And I think, from the valuation perspective, being able to say, okay, we generated this porphyry project and it cost us, $1.2 million to acquire it, to do the work up, to collect the geophysics. That allows us to quite accurately place a value on what the royalty might be worth, and, therefore value early stage royalties that don't necessarily fit into these normal economic valuations. And that's the way that sort of the PG and the royalty acquisition business can be compared and contrasted to make these decisions.
Yeah, it's very interesting. As you say, that's a major competitive advantage that you're willing to buy royalties like that, because essentially most royalty companies would not even consider it, because it doesn't fit the kind of the cookie cutter frame of valuation. So I really like that a lot. So first of all, we'll just get into Silicon right away. So if you can just characterize, for those that do not know, Anglo Gold Ashanti as a company, it would be useful to know how they are kind of organizationally, what kind of level of ambition they have and drive and so on. Just explain their corporate culture.
Yeah, look, I think with Anglo Gold, I don't know them that well. They're from my, I guess, original perspective of who they were a South African based gold miner. I think they've got some really neat assets around the world, but they've been trying to transition out of South Africa for a while. They had some great mines. I think Obuasi is probably their key asset within Africa still, but they moved into South America at one point. They've moved into Brazil and other jurisdictions. They've got stuff in Argentina. They've got stuff in Australia. But they years ago, I know that they were involved in North America, and then they pulled out. They came back. And so I think as a driver to move into, I guess, from an investment standpoint, perceived as more favorable jurisdictions, they've moved into North America. And for them, they picked up the Silicon project as one of the key assets that, well, from an exploration perspective, early days back then, they picked a project up as to see what it could become. And now it's become one of their key assets within their portfolio. And you can see it in every quarter that they speak about Silicon. So it's interesting to see sort of a big mining company shift from its roots in South Africa to move not only corporate head office to Denver, but they moved to their primary exchange as the New York Stock Exchange. And so it's kind of the formation, same company, but the sort of the corporately it's changing quite a bit. And alongside that, they've got this fantastic asset called Silicon, which supports and cements their movement across the Atlantic, if you will.
Yes, and in terms of the pipeline of projects, I mean, from all the information that I've been able to gather, they are certainly pushing Silicon as the next build within the company. I think they have
They are.
kind of brownfields development to improve the African asset first, but then the next real build is going to be Silicon. I think that's clear at this point.
I think it's right that Obuasi is always at the forefront. I think of every conversation. It's a amazing asset for them. And then they've had some other assets elsewhere, but Cerro Vanguardia has been around for a while, and I think that's slowing down a bit. And then in Argentina, and then they've got assets in Brazil, and they had a big push for a while into Colombia, and that I don't think if it worked out exactly the way they wanted to, but during that time they were involved in Silicon, and I don't think nobody realized how big it was going to be. And so as they realized what it was going to become, they made this transition, and it's complemented their corporate movement across the water very well. It just everything kind of goes hand in hand with Silicon. And you're right, if you look at their quarterly updates, Silicon is always within the first few slides of the presentation, which for a brownfield or even an exploration level operation is unique. You don't see that in other big mining companies. They talk about one of their exploration assets is as much as anything else. And in the first few years of Silicon, when it was being explored, Anglo said nothing, like no drill holes. They would acknowledge that they had a drilling program. They might give the meterage or the expenditure, but just give very factual, this is what happened. We drilled this amount, but made no commentary on their the progress. But you could pretty well figure that if they've got that many rigs on a project, that something's going on. And so that's sort of what really intrigued us when in the early days of the development of the project. But I think now that it's got the confidence in the project, Anglo can see that, they can see the size potential. They sort of switched gears, and now they talk about it all the time. So I think for us and Altius, who holds a sister royalty on the project, it's been a very good past couple of years for us now.
I want to ask you, when was the cutoff date for the PFS, and how much work has been done and could it contribute to potential expansion or re-envisioning of mine life? I know could Silicon be incorporated in the PFS now? I mean, what will change in regards to the mine life from what you have outlined in the presentation now as a potential mine life to what will be defined in the PFS, in your view?
So the PFS, I believe, we got an update last week, earlier this week, pardon me, from Anglo Gold, that it'll be towards the back end of 2025. I think it originally, look, to be fair, they said 18 to 24 months. That was the original thing they said. And so if it's 24 months, that's the back end of 2025. It started 2025. It started at the beginning of this year, the PFS. And the PFS you have to get it to an M&I status, the resources to an M&I status to be able to include it in a PFS. Silicon's already there. So they don't have to worry so much about Silicon. But Merlin, because it is newer, because it is so much larger, and it's still growing, they can't get the drilling density yet to get it into that M&I status. And maybe they're getting close. We don't know. But once they do, they'll be able to incorporate that along with Silicon into some sort of mine plan. Silicon already has a pit constrained resource. It's got a lot of the economic rigor that you would expect applied to it. So we're very comfortable with that. It's just, I think for Anglo Gold, the real thrust right now is to get Silicon into that measured and indicated category, and you have to get down to a much tighter drilling density. So in an inferred resource, the drill holes are spaced fairly well apart. And when you get down into an M&I status, it's much closer. And so not only does it help, get a higher confidence of what you've got, but also the grade. With the inferred resource, they capped the gold grade at 3 grams in Merlin. And so you can see that there's a real high grade core to this. And you can see in the earlier this week, some of the drill holes they announced, 10 grams, 8 grams, 5 grams. Those are all well above the 3 gram cap. And so our hope is that not only do you see an increase in grade size, ounces size, but also in grade. And so that's what we hope to see over the next while. And in amongst with the drilling that's going on, you've got geotechnical drilling. They're trying to understand water. There's the environmental. There's the permitting, other permitting that they need to understand. And then there's trade-off studies. As I mentioned, there's the heap leach operation, which is great for oxide gold. But there's also, it sounds like, not only there's a real high in oxide gold, you don't get the recoveries. Heap leach operation, you don't get the recoveries like you would in a milled operation. And so because of the high grade nature of some of the core they're finding, they're also introducing a milling operation. So you've got a tandem milling heap leach operation. And that starts to bring into another side of Silicon or Merlin that we don't know about, which is the sulfides. And in all the resources to date that have ever been announced are all oxide resources. So there's transitional material, which is part oxide, part sulfide, and then there's sulfides. We know at Silicon, for example, there's probably a couple million ounces sitting there that were removed from the resource during their study because we feel that it was probably sulfide material that fell out of the resource, and so they haven't included that. Can they bring that back in with a milling operation? Possibly. So there's a lot of unknowns, and so the trade-off studies right now are probably ongoing, and I can appreciate how hard it must be. Like they drilled 66,000 meters first half of this year, alongside doing all this work. Like the amount of work must be incredible. Like the amount of people they're using must be huge. And I know for drilling costs last year, they spent 79 million US, I think, just on drilling alone. Doesn't include any other thing they're doing there. So it's a huge capital outlay for them and a lot of work. So by the time we get to the end of midway to the end of 2025, they should have the PFS. It should bring a lot more clarity to what both they're going to do with both the Silicon and Merlin deposits. But I still think that based on sort of the targets that Anglo Ashanti has identified, especially out to the west of Merlin, there's possibly still much more to come. And it's just, we don't know. And so, we are living through them vicariously, watching their public disclosure come about. It's exciting. And we just have to see. But we should have more clarity next year on exactly what's going to happen.
And then sort of beyond the PFS, kind of a broad-based timeline. This is just your opinion, and I'll ask what the analysts are also estimating. But what do you think is a realistic idea of when this starts producing, or getting into this sort of bonanza, crazy production profile?
I think at the very fast end, you could see 2029. I think on the other side, it could be 2031. There is a push right now by AngloGold, and they've said this publicly, is that they're trying to find ways to have faster startup. And the only thing I could think of today is what would give them the ability to start this up more quickly is there's that high grade. Within the high grade core, there's a real high grade core. And if they started on that first and got down to depth, could they go to production more quickly with that? Possibly. look, the North Bullfrog is going into production. Again, we don't have a royalty on that, but that's going into production, I believe, in late 2025, early 2026. So they'll have mining operations in the camp, and they are using that permit is to help guide them to do what they're doing with Silicon and Merlin. So they have a head start. This head start was actually created when they bought Corvus. Corvus had the permitting activities well underway by the time they'd acquired them. So it gave them a head start on getting the permitting process underway in that region. And so it'd be lovely to see it start up in somewhere in 2029, but we'll have to see still.
But the timeline constraint, or what can kind of push this further out, is it permitting that you're mainly looking at that point?
I think
engineering,
so.
internal decision making to defer, to expand, or what's the big thing?
Anglo Gold will not try to find every ounce there is to find in the camp today. That could come in the future. So you've got the 13.5 with all the resources they've got through indicated and inferred resources. Maybe they add a few more million ounces along the way here. But look, if there's 20, 30 million ounces plus in the area, you're not going to find that all today. And those will come in future years. I think a great example of that is Round Mountain. I think in the late 70s, they kind of started off with 900,000 ounces. And I think it was within a few years ago, they went past their 20 millionth ounce. And so these types of operations have this ability. You look at other major camps within Nevada as well. They start out with, like in the Carlin trend, where they start out with sort of 15, 20 million ounces. They've gone on and produced probably 30, and there's still another 25 to go type of thing. Like you keep finding more resources as time goes on. So at some point, they will probably say, look, this is what we've got. We're going to permit with this. I think what they don't want to do is they don't want to put a big leach pad or a waste dump on an area that has mineralization. That's probably what they're trying to avoid, because once you do that, you've kind of sterilized the deposit, and that's what they probably want to avoid.
But just to crystallize for people what this is for Orogen, so that's kind of because they have clearly said it in their presentation. Now, this is a multi-decade, north of 500,000 ounces per year. So that's 5,000 ounces for you guys. You have an NSR at, say, 2,000 gold, that's 10 million per year in just royalty revenue like that. But of course, you also have the kind of the upfront sort of over 1 million ounce per year production, which is doubles that,
Yeah, I mean, it's
case.
1 million ounces. That's 10,000 ounces for us, and you pick your gold price, US dollars.
Exactly, it's the same calculation, but it's sweet.
What we get, right? And so the first few years of the mine life, 3.5 million ounces. That's a lot of gold for a little royalty company.
And likely, I mean, if you kind of focus in on the geological potential, more ounces will be found. You have the sulfide potential that can add even more potential production to the production profile. So generally speaking, one could assume that it will even improve even further in terms of economics for Orogen than this kind of profile.
That's right. And look, they're still understanding, I think, the exploration potential of the camp. In their disclosure right around the end of Q1, and in fact, they even said it again in Q2, is that they were drilling it's called a piezometer hole. I think it's for the hydrogeological studies. They encountered a hole that they said had it was a significant intercept with gold mineralization, 900 meters to the north of Silicon. So this is the other way. It's not down in Merlin. It's the other side of Silicon. And they said it highlights the tremendous growth potential of the camp. And so there was no grade attached to that. There was no width attached to that. We don't know. But, you can go out on site and you can see that there's a rig or two turning up there. What is that? Is it 500,000 ounces? Is it 1 million? Is it just, a couple localized intercepts and that's it? Or is it something much, much larger? And it's all along the same sort of fault system that occurs on Merlin, occurred on what they call the Linda Strip Seahorse. It's the same fault system that creates silicon, and now they've got another one. And so, yeah, you see these opportunities to see growth and so it's not just silicon and Merlin that we're focused on. I mean, those are it for us today. Like, those are incredible deposits. But we have a royalty AOI. And so it's more than just that. And so if they find more within our royalty AOI, that goes to our that goes to our credit in the future.
Yeah, for sure. And then I guess just to kind of highlight what the analysts are thinking right now, what's the range of valuation ascribed to your royalty exposure?
Well, we had we had two analysts covering us. One, unfortunately, one group they went out, they closed their banking side of their business, and so they don't follow anybody anymore. They just stopped producing. But the one group that we still have coverage is Cormark, based on the recent activity within the company because of sort of the growth of silicon, because of the add-on at Ermitano with Navidad. They've got a target price of $1.50 a share on us, Canadian.
Yeah, okay. And what portion do they assign to silicon specifically?
Probably 80% is assigned to silicon.
Yeah. So
the rest is on our. I mean, maybe that changed slightly with the addition of Navidad recently, because I think that the 10% bump, we were at $1.40. That 10%, that 10-cent bump was all because of Navidad. So maybe that's changed slightly, but I wouldn't say materially.
What can you just highlight first? What's the geo contribution from Ermitano per year approximately at this?
In terms of
gold equivalent ounce per year.
Oh, it's about 2,000 ounces.
Yeah,
that we get. We get about 500 ounces, 5 to 550 ounces a quarter.
Right.
From so that their annual production profile ranges between 80,000 to 100,000 ounces of gold. It's a gold. I mean, they call it a silver mine, but it's really a gold mine. Just that there's so much. The value is so much in the gold. So when we get it, it's sort of about 5 to 520 ounces per quarter.
Excellent. And then in terms of the production outlook as defined currently in the coming years, is that expected to be stable, or is there any depletion? The mine after 7 years.
Yeah. Obviously, with depletion, in the original PFS, they started the mine actually on a PFS, not a full-fledged feasibility study, which is fine. But they had initially laid out 7 years, and then by the time it got to now, it was going to start to deplete in terms of the actual annual production profile. But because of the conversion of inferred resources, because of the addition of Luna, and now because of the addition of Navidad, I expect that production profile to change. And First Majestic has not put out any new study based on Luna, based on Navidad yet. But we see from the conversion of resources from inferred to M&I, you still see sort of that 6 to 7 year mine life. So it hasn't changed. It's always been kind of 6 to 7 years. So it hasn't really changed much because of the conversion. But now that you've got Luna and now that you've got Navidad, as they bring in those areas, and I have to caution that right now Navidad is just a zone. It's not a resource. But once they get it to, if they get it to a resource, that could add several years. And so, or 5 to 7 years. Like, so I don't know. We do see this is going into the 2030s, which by that time silicon will have started up.
Could you highlight the 3 projects within the portfolio currently that you believe has the highest potential to? I mean, it's really tough to live up to silicon. It's a big leap of faith for you to state that now. But who do you think are the 3 within the portfolio with the best odds of being really significant for Orogen?
Yeah, it's hard to pick, and I think if you asked a different geo within the company, everyone has their favorites. I tried to rank them based on partner capability. That's obviously, a great project with a partner who's not going to be able to raise the money to drill it is maybe not as game changing. The current exploration that's going on, and then the potential target size. And I think the three that jump out, start with one we don't talk about too much, Rica in Colombia. It's a very large, well-exposed porphyry in an incredibly prolific belt. It was identified in a UN regional survey back in the 70s. Amazing soil and rock numbers at surface, and it's never been drilled. There's a very well-funded private company who have come in and managed to consolidate the entire belt, and they're working hard on establishing a social license. And, importantly for us, we think they're doing it right, and we think they're doing it in a way that means in the short term, they'll be able to do significant drilling and advancement of that project. And that is one of the ones where the scale of what could be there is incredible and could be a company making asset. The geological potential of that belt is very impressive. We've got a 1% NSR on that, subject to a 0.5% buy down, and that could be the next sort of silicon scale asset. Some of the ones that are seeing current drilling, Headwater Gold are drilling out at Spring Peak. It's a low sulfidation vein system in Nevada. They're partnered originally with Newcrest, now with Newmont. And I think a lot of people assumed Newmont wouldn't stick around, but they have. They've funded 7,000 meters of drilling. They're talking about sort of 20 to 25 holes. They're very much focused on this disco vein, which was their 2022 discovery. But I think the thing that excites me is the strike potential of the system along the Bear Mountain Fault. They did a very aggressive 400-meter step out last year to what they're calling the Pioneer Zone. And while the numbers weren't quite there, it showed that the vein has continued along that strike length. And that, to me, turns it from being a small vein discovery, potentially in a single ore shoot, to adding real scale. And I think the drill program this year could give us some answers to how much strike length that structure could continue for. Newmont have committed to using their deep sensing geochem, which is one of these proprietary major methods that I think will really add some value there as well. We've got up to a 1% NSR payment and some cash pay. So 1% NSR royalty and some cash payments there. The other one that just has the scale to be huge is Maggie Creek. This is Nevada Gold Mines, the explorer in Nevada for Carling, and you're in what the southeast end of the prolific Carling trend. It's a lower plate target. They're drilling a deep hole, looking for that prospective package that hosts tens of millions of ounces in the other deposits in that trend. They're following up on some holes drilled by US Gold, who they bought the property off, who intersected a load of prospective orpiment and realgar, these arsenic-rich minerals that you regularly see close to the Carling targets. And they're drilling a deep core tail right now, actually. It's intersected the right rocks. We just need to see if the alteration and mineralization is there. But just with the postcode of that property, where it is, the scale of these Carling systems, and the fact that it's Nevada Gold Mines who operate everything in that area, drilling it, that has the potential to meaningfully advance if they do find the prospective mineralization at depth. And we've got a 2% NSR on that property. I know you said free, but it's honorable mention as well to MPD South, the porphyry being drilled out by Kodiak Copper in southern BC. They had some exciting new discoveries of porphyry centers, not quite the grades and mineralization we would want to see, but these are big systems. And I think they've demonstrated a cluster of interesting copper occurrences. And they're out there now drilling a 10,000 meter program, potentially looking at some of these targets in a bit more detail, and that could lead to some exciting results for us as well. So yeah, they're They're the ones to me that I look forward for the news flow from those companies, and we could see meaningful results coming out in the next few months.
So, just first of all, what's your willingness to use debt and equity? I think we've pretty much established it, but just cover the point as a separate point briefly. It's going to be a rare case.
Yeah, look, when we think about equity, we keep looking at silicon, and it's like, okay, well, is there anything as good as silicon that we're looking at? And you know the answer to that is no. So that gets pretty quickly snuffed out. We haven't found anything that we'd be willing to use debt for yet, just given today's the cost of borrowing money is really high, especially for a group our size. And we just can't find the asset that can provide us, a return that's going to be similar or that'll be better than what the cost of servicing the debt is. We don't see it. And so we've stayed away. And look, a lot of the assets that we are looking at that are kind of like that, there's risk. And if you've borrowed a bunch of money and now you're servicing that debt and the asset that you bought isn't coming through, well, for us, if you had a bunch of producing assets and it didn't work out, well, it's not the end of the world. But for us, we have one producing asset. So it would be a glaring mistake on our part to buy into something that didn't work out, and now we've got to pay debt on it.
About the general opportunities out there right now, I mean, in terms of acquiring royalties, do you see, and you guys focus on the earlier stage stuff, but what do you see is characterize the arena in the coming 12 months in your view in terms of opportunities?
So yeah, the strategy is similar. Like we went through a strategic review last year. I think based on the commodity cycle and sort of the capital markets, there's a bit more of a focus on trying to generate good quality targets, trying to find project opportunities to buy into for the PG side of our business, and focus on distressed assets that we think could, yield a royalty to us or find royalties that continue to find royalties that are out there. So that strategy, I think, has shifted. Whereas in the prior strategy, we were like really focused on moving projects because we had such a large portfolio of them when we merged Evrim and Renaissance together. So that shifted a little bit, and that will continue on. And yeah, these transactions, they're not easy to come by, but we're not, going to do something that kills us as well. So it's kind of sticking to our knitting. If there is a diamond in the rough that comes our way, we'll have to address that. So, but again, it speaks to the flexibility. You can pivot into many different opportunities pretty quickly.
Yeah. And then the kind of the big thing here we need to discuss is the hypothetical sale of the Silicon NSR. So if you just outline the rationale for you guys selling the Silicon NSR, and then you can kind of steelman the other side of things not to sell the NSR, because this is a kind of a fine balance, and you are in a bit of a dichotomy, so to speak, with this situation, which is interesting. But maybe you can outline the thinking.
Well, I think, it's a good point. We've long wanted to build Orogen and grow beyond our peer group into sort of the next level of the royalty space. If we're to do that, we have to make some fundamental changes, I think, to our investment strategy, and take on more risk and possibly take on, debt and things like that. So it can be done. It's not easy to do. It's not without risk, but look, we're in the business of mitigating that risk and trying to find the best possible investments we can. So there's always been that drive to grow, and we can also do it through the prospect generation business if you find another asset that you can grow the company on. But challenge with that is that they don't come every day. They come every few years type of thing, if that. So there is that. As you know, Gorm, there's a process underway that's been initiated by Altius. They have a sister royalty on the same silicon area we do. They are in the process of selling it. When that's completed, it's probably going to daylight a lot of value onto Orogen. And if Altius' ownership of Orogen is in there too, so it also has implications. I would think that anybody wanting to buy Altius' royalty would also want to buy their ownership in Orogen. So there's these factors to consider as well. Altius has been a fantastic supporter, and I know that they've always been very helpful. But at the same time, they're also their investment. They're here to make money for their shareholders, and I completely respect that. So we're cognizant of what the implications of the value of the sale of their silicon asset may bring to us, and where it puts Orogen from a valuation standpoint. If a royalty company, and it's going to be probably a larger one, because if they try to buy both assets, there's not a lot of royalty companies out there that can pay as much. But if they do, we have to decide at the board and with the management, is this what we want to do? Because it's probably going to be, I would say, my guess would be, it could be a big number. And can we grow the business to that number within a short time frame? And that's the question that we ask ourselves continually. Until we see that number, it's hard to say. So we kind of watch this with curiosity. And so I guess the bottom line is that the silicon asset, if sold, would not be sold for cheap, because it is an exceptionally rare and precious royalty. Tier 1 size, Tier 1 jurisdiction, Tier 1 operator, forefront of its mine life. You just don't find royalties like this. And they come and go very infrequently. And so Orogen has this fantastic royalty asset to grow their business off of. But even with that, it's still not easy. So we have to weigh that against whatever value we could possibly get from this, if it ever materializes. And so it's interesting days for us, for sure. And I think might be a better conversation to have when the Altius process is completed. But it's hard to say, which way we go today. I mean, I've never set up a company to sell it, like just hoping for a sale. I've always set up companies to build. But if the right price ever comes along, we consider those prices. But it's never been in our DNA within the company just to set this up to get rid of it. And in saying that, it has to go for a very good price.
Yeah, I mean, to me, there's kind of a couple of thinking points. So first of all, just to cover the Altius thing. So let's say that you are not happy with the price. Altius is your biggest shareholder. There are personal relationships between management, of course, long standing and so on. But from a shareholder's point of view, are you confident that you would be able to strong arm and say, no, we're not going to do this. This is not good enough for Orogen. We do not want to transact. We want to hold the asset, maybe because we want to become a larger royalty company down the road, and we see this as the cornerstone to get us there. I mean, is that a card you can play if it comes down?
There's challenges associated with that. There is, would our largest shareholder be okay with that? I don't think they'd be against us. I think they understand that we have a great royalty to grow the business off of, but there's a time component, right? And people buy shares to sell shares, and they're trying, like everybody else, Altius is trying to make money. And so, I wouldn't think anything less of them if they decided that if we decided to grow it, would they still stay a shareholder? It's a significant value component of their portfolio today, their investment portfolio. Would they hang on? I don't know. And if they didn't want to, I think we can find a home for the shares, a good home. And so we could continue on. But in the meantime, they've been very good, very patient. So maybe they don't necessarily want to move their paper. They just might let us continue on and grow. But that's one of the things that we think about. There's just so many permutations, I think, combinations that you could apply to this at this current point. If they hung on, if they decided to sell, if
there could be a block,
if an acquirer won, if there's a winning bidder in the Altius process, what happens to the second place company? Do they come straight at us right away to ensure that they're going to get a piece of the Silicon camp? Or does the winning bidder put in such a great bid so they tie up the entire camp? I mean, there's just so many different ways this way can go, that this transaction could go. So it's really hard to give a lot of clarity. I just only can think of pathways right now as to what would happen.
For me, kind of the big fork in the road is if you decide to transact. I mean, is one permutation where you decide that you want to keep Silicon permanent, you want to keep Silicon within the portfolio, and you want to transform the business gradually to acquiring more royalties. Because if you decide to keep Silicon, either you will have to be the biggest dividend-paying PG company in the world ever, or you will have to become a royalty company. More like Altius.
When we get that question already, we've got, I'm not going to say only 19 million in the bank. It's a good amount of cash for a small company to have. People keep saying, what are you going to do with that money? And we try to be patient with it, and deploy it in a responsible manner. But imagine if the first year of production of gold production at Merlin, which right now is slated, or second year, pardon me, is slated to be 1.8 million ounces of contained gold. So say there's 1.5 million ounces that are processed off that you get, and we get 1% of that. The revenue that we'd bring in is probably in the $30 to $40 million a year range. And
exactly,
so we would probably start to dividend that out to shareholders. Is you can't deploy that capital quickly into prospect generation. You just can't.
But the counter argument is that because a royalty like this will be valued less because you will be effectively a one asset company in terms of kind of cash flow exposure. It will most likely be less valuable within such a vehicle than within a Wheaton. Within a Wheaton, they're able to pay a lot more for that because it will contribute significantly to our diversified portfolio. So that's a strong argument against doing it if you do not intend to embark upon becoming a multi-asset royalty company over time. So that's kind of at least my idea of a counter argument, that it's more valuable for shareholders to actually sell the asset at some point.
I think that's the trade-off. Like, can you grow? What do you have to do to grow? Shares, debt, quality of the asset. It's not without risk.
And it's a big transformation from the corporate mentality that you guys have currently, or how the business operates, right?
The business model would have to change. The strategy would have to change, and how we approach our business. And I think there's a pathway to it. But again, it's there's risk, and the flip side is, as we say, we continue on doing small scale transactions. We're the quiet prospect generator. We dividend out those, the revenue over time, but that time, it's a long time. And so, would shareholders be happier with getting all that payback tomorrow versus waiting 10, 15, possibly 20 years?
Yeah, it is a really interesting dynamic. But what do you think from this point in time? Which timing do you think makes sense from Orogen's point of view to transact? Because I feel like right now certainly does not make sense, because there is a lot of clarification that will happen and realization of the real value here in the coming 2-3 years as you move towards a construction decision. So that's certainly at least my view. But when do you think it starts to really
I think when there's going to be a point, as I mentioned earlier, I think when Silicon expanded silicon project, which is Merlin and Silicon together.
Yeah.
When they switch over from the narrative of we're growing these deposits, there's this many ounces, they keep growing. When it switches over from that narrative to a development one, which you're starting to see elements of that come in, that's, I think, because the value is going to become fully baked at that stage. And I any ounces that they may add on in future years are incremental, and would it add value? Yeah, it's always going to add value, but from a discounted cash flow model, not so much. And so I think there is a timing, and I think that time is getting on. And again, as I mentioned earlier, like you don't get to see every ounce that gets produced off this. If you or as it stands today, like you won't see those for probably 10, possibly 15 years. So you can't. It's tough. Where I think, if you're going to value this thing and you look at it, I think there's a certain value that people would pay for ounces. How much are they going to pay for future ounces? And I guess that comes down to a premium to NAV if that's how you value it when you go to acquire Altius as royalty. And again, I think Altius and Orogen see the world, especially with respect to silicon, in a very similar way, that the price, the expectation is going to be strong because this is such an important and rare asset.
Yeah, and it's it has a 3.5 combined or 2.5 combined NSR between the two, which is very large, and it's very large. It's like one of the biggest deals potentially out there when it comes to roofs. So it's going to be the big boys, and they're going to be able to pay up. The final question that we always ask: where do you want to see Orogen in 5 years from now?
Oh, I guess that depends on the outcome of what we're talking about right now. But if we stay as we are, and there's good reasons to, look, I think that we can use silicon, much like Evrim used Ermitano as leverage to combine with Renaissance to form Orogen. There are assets out there that we see that are held by various groups, not royalty companies, but other groups that we see that you could continue to grow the company. So there are opportunities to do that sort of thing. And so in 5 years' time, if we've decided that we're going to continue to grow, those are the types of places we want to be. And so the transactions that we would do would be share accretive, and it would be they would be good transactions. And my hope is that is the way we would grow if we're going to grow. If through the transactions, through Altius and whatever's happening there, if we ended up selling the silicon, there is, I think, an obvious win for everybody. But the core business of prospect generation probably doesn't belong in most royalty companies. I don't think it fits their model. It's not, perceived at the initial outset as being the most, head-turning transactions, or it doesn't creatively, it doesn't add a tremendous amount of value on the front end. We would want to continue on building. And, if we were to build in a transaction, could we keep Ermitano? And if you're going to keep Ermitano, keep your PG business, keep your portfolio royalties, I think that would be a great outcome, because you're starting a prospect generator in which you never have to issue shares to raise money for. I remember the first 10 years or 8 years, 9 years of Evrim's life, it's hand to mouth. You're always trying to raise money to keep the budgets going, to keep the people going, and you're issuing stock. And I hated that, because you can see where you're, diluting everybody out. This situation, you could start a new company out of a spin out type transaction where you could start all over, but with a paying royalty. And that is I think for any prospect generator, that is the ultimate setup. So I see really good opportunity whichever way we go. And I think in 5 years, I think in the past few years, we've demonstrated great growth from sort of the 2020 up to where we are now in terms of share price growth. Again, depending which way it goes, I think we can replicate something similar to that. It does take assets to make it that way, but I think we're smart enough and can structure deals that will reward our shareholders well.